Hey everybody, welcome back to the channel and happy Friday. I need your attention right now because we have a time-sensitive situation we need to discuss regarding both UGAZ and natural gas futures. Let's waste no more time. Here we go. First, I want to take a quick second just to say that if you want to support the channel, the best way to do that is just to watch one of the ads. It's so effective and it allows the channel to grow. So thank you. Now on to our time-sensitive information. So this morning as I've been watching the natural gas futures chart, it's sold off and then steadily has been climbing back to the upside. Now this is significant right now because it looks to be observing the support level that we drew on the chart earlier this week. This is exciting because it is a supply area where I can nibble a small amount of shares in order to add back to my position for a move higher into next week. Now to get a better understanding of what I'm talking about, let's jump over to the chart and take a peek. All right, let's jump into things here. We got the natural gas futures chart up, December's futures for the daily time frame, and here's what is so urgent. If I zoom in right now on natural gas, you can see this level, the top of our gap, which we determined was at 2.781, that seems to be holding solid for support. Today, we had price action push down, and we had talked about how significant the 200-day simple moving average can be. And now look at this. It's sweeping through. It's touching the very bottom of that wick, showing that price action respected that support level. It pushed back up, and now our price action is back above the top of the channel. So this is very bullish in my opinion. I know it's a doji shaped candle, so it means that things are a little neutral right now, and I'll get into that a little more. I have a report from FX Empire that I want to show you in just a moment regarding this sort of neutrality, but it's respecting it nonetheless, and that's very important because if we get into Monday and things are starting to move back to the upside, that's a signal that we need to be possibly nibbling some shares in here to add back to our position from where we trimmed our shares up here. We got the push up, sold some of these shares up high, let it pull back down, waited to see if we were going to go lower or bounce and go higher, and now we're showing some respect for this support level and the 200-day simple moving average. So as that support sets up, if we then start to move back to the upside, for me, it's going to be nibble, 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 nibble as we move up with hopes of possibly breaking this line here, this overhead resistance, and moving further to the upside. Now, if we jump over to UGAZ real quick, we'll look at the same setup and we'll see how it's respecting over here. I know the price action isn't as dramatic when we're looking over here at UGAZ, but as you can see right now, we got that push up, the pullback, and we roughly have our support level or the top of the channel right over here at $17 and basically $17.50. This came down, we didn't quite get a probe yesterday to touch it, and today we haven't quite touched it either, but we're sort of setting up a little bit in this zone. If I draw another line in here, this can kind of help create that zone. So anywhere in this zone is sort of the support level. Support levels aren't always right on the penny. It can be a zone from one range to another. So I would say that support right now for you guys looks like $18 down to $17.50. That seems to be the nibble zone or the supply zone where you could maybe nibble and add a little bit to your position if you want to, for the possible move to the upside. Now again, just to remind you from earlier in the week, we do have this 200-day simple moving average that's moving in above. I know it's a little confusing. On the other chart, we're above the 200-day simple moving average, which is very important. But we have to remember, not all traders are just using /NG. Some traders are just trading UGAZ. They're just looking at this chart and they're seeing this looming overhead. So if you do nibble and you do add to your position right here, then when we move back to this upside, we have to be thinking about trimming our size, taking some profit, putting a little bit of money back in your pocket when we hit this resistance zone, and then if we break out above it and then pull back and go higher, you'll still have some shares
And on the pullback, you can add back to go higher. It's sort of just selling into resistance, nibbling back at support. Selling into resistance, nibbling back at support. So now that you've seen this with the overhead looming 200-day simple moving average, let's pop back over to /NG Z19, which is the December's chart for natural gas futures, and you can see we are clearly above that. So this causes some confusion, and I've had a few of you ask questions about this, and it is kind of an interesting situation because here we are above a major support resistance line on one chart and below it on another. So what we're going to have to do is use this to sort of look at our momentum and see what we're doing, but then be smart and know when to take profit when you're looking at the other chart being UGAZ.
Okay, now to give you some more insight and another perspective, I want to share an article from fxempire.com that seems to paint a more neutral tone from November 19th to the 22nd regarding weather. I'll link the article below in the description so you can take a look. So following the bullish report on Thursday, there was a change in forecast with natgasweather.com saying the frigid cold pool is likely to retreat back up into Canada on November 19th to the 22nd, which would make it too far north to be captured by U.S. weather systems. So this leads them to believe that the tone in the market over the short run could be a little more neutral than we were expecting. But quickly, I wanted to show you this cold blast that is coming. This graphic right here is from natgasweather.com, and it's pretty crazy how cold the temps are forecasted to get. If it retreats back up into Canada, this could cause some major issues for the bulls. Bespoke Weather Services tends to support this assessment. Apparently they had cautioned that the rally following the EIA report this week could have trouble finding colder trending guidance to back up the move to the upside. They're pointing to a drop in production, stronger power burns, and higher liquefied natural gas demand as the drivers of the tighter week reported in the last storage results. So for these reasons, Bespoke Weather Services is also considering it rather neutral despite the numbers coming in bullish this week. So rather than bumming about this neutral feel that's coming forward this week by some of the analysts, I'd rather just set up a plan, figure out what I want to do in case it is neutral, but also temper that and say, could this plan be adapted if we do get a surprise strong move to the upside? So I want to be ready for both scenarios, and I think we can set up a plan for that. So let's jump back to the charts and let's come up with a neutral plan that could be geared to go long if the situation presents itself.
All right, let's set up some ground rules for the week just to help protect ourselves because things are feeling a little bit neutral, and we'll be planned and ready for if something moves strong to the upside. If, say, the weather forecast changes, or on Thursday we get a surprise withdrawal, something comes up that we weren't expecting and we go long, what are we going to do? So I think rule number one of the most important rules to stick to right now is if we're going to be neutral, then we have to know where our support and resistance zones are, and we have to sell and buy back in those areas. So I would say that if price action gets anywhere close to our 2.885. Anywhere in this area, if you get any slowdown in this area, it has to be an immediate take some profit. If we dip back down, we get anywhere near this line, I would probably nibble a few shares to add back to my position, but being ready to go ahead and sell again at the top. Now, one scenario I want you to be aware of is sometimes you'll get corkscrewing that will start to tighten up. So let's say, I'm going to draw some lines here and bear with me. I apologize if it looks bad. But if we move here and then we move back down and then we move back up and then we move back down, this is starting to show some coiling. So what I would recommend in this situation is to draw a line from the tops of this area and include these two humps there. Draw yourself a line like that. Now, this could be big, small, this is just an example, but moving forward, if you're nibbling on the bottom and taking profits at the top, you have to be aware of this line. So the next time through, let's say it drops down and then price action works back up to here. you want to go ahead and take some profit here. Even though it's not up here where we used to be, we're coiling down. Now, when you're coiling, you could get a strong move to the upside or a strong move to the downside. But for right now, we're just wanting to be aware of where our support and resistance levels are in case it's a neutral market. So if we take some small profit here and it moves back down, and then you nibble more, you add more here, and it moves back up, you're going to go ahead, you're going to take more profit here. So you're just taking profit anytime you hit that resistance, and you're adding back anytime you hit support. And the support are these bottom areas. And again, this is just my opinion. Trade using your own techniques and your own due diligence, but this is just what I typically like to do. It's just my opinion on what works for me. Now, that's the neutral case scenario. So things are neutral, we're just coiling, not much is happening. But let's say we get a big breakout, okay? What do we do in that scenario? We sort of touched on it before, but being that you sold a little bit of shares here, you took some profit, and then we got a bust to the upside. It surprises us. We say, okay, we got a big move up, what do I do? What you want to immediately do, is my opinion for me, is I'm going to take another small percentage of profit here, and I'm going to wait for some kind of pullback. And when I see a pullback, if it's respecting a previous level, like maybe over here, maybe it just pulls back into this level and then starts looking like it's wanting to move higher, I might nibble right in this area to add back. So anytime you get a big surprise up move, I go ahead and I sell partial profit. I put a little money in my pocket and wait for a pullback. Now, if we start to get this pullback and it just keeps heading down and it's just not looking good, you just keep waiting for it to turn around and move back to the upside. But if it bounces right away, I want to add in this area and look for a move to the upside. So I think this scenario, it can be really helpful for covering a neutral, sort of sluggish week if we get one of these where we're just coiling around. But at the same time, we're protected because we're doing all the right things, and if we get a big pop, we know what to do. Immediately, I'm going to sell maybe a quarter of my position or an eighth of my position. Or if you want half your position, wait for that pullback so you can add back and then move higher. So I hope this plan helps just a little bit, just to kind of get you sort of in the mind frame of it could be slow or it could be fast, but regardless, we're ready for either. Hope this video helped. Smash that subscribe button if you liked the video, hit that thumbs up, and we'll see you next week.